All right, so we started the new week with a very similar pattern that we've seen before, where we kind of follow up good, decently strong moves with not very much of a move at all, but still maintaining the bullish trend that we're currently on. The question is whether this bullish trend that we've been on now for a month on the S&P 500, what's the projected time frame for that compared to what's typical, what's normal, and why? So we're going to break that down as well as we take a look at a stock for an earnings or for a trade idea that has earnings this week, and we're going to talk about how we can trade that by still managing risk and still opening ourselves up for potential reward coming off a directional move that may be fueled by that earnings. So we'll talk about how to trade that stock later in the video. So let's go ahead and get started. Today is Monday, December the 8th, 2020. This is the market outlook from marketscholars.com. My name is David Settle. The S&P continues to show a strong bullish intermediate posture here. With the green line, you can see well above 90. In fact, 97.8. Again, like we kind of saw that over here. We didn't quite get up to 97 initially, but now on this current run, we got up to 97, 98 right there on the intermediate posture. And we had, a week or two into expiration and a week and a half coming out of expiration there in August, September, with a very, very high intermediate posture and a relatively high near-term line as well. The near-term line getting easily back up after almost getting a cluster yesterday with the near-term line there at the 77th percentile, 78th. And the momentum line at the 77th. The momentum line dropping because of a small range and a small down day today, but the near-term line continuing higher as the trend. You can see this near-term run, this entire near-term run here is also continuing higher, well above, as we've seen, this 30-day moving average here. In fact, if you reverse this drawing here, sorry, let me do it this way. So remove that drawing. If I were now to reverse that drawing and draw it and the flip side this way, so it'd be this way, then you can see here where the 38.22 is where the 162% retracement level is. So it kind of gives you an idea of where we can go up to after breaking back up through the 100% level. So, we're maintaining a strong trend. We might not get too quickly up to that. If we make that kind of move over here up to 38.22, then we probably will end up with that kind of move coming out of it. All right, because it's, again, just how strongly bullish we already are here. So, but a strong positive. The long-term market sentiment's rising. You can see that's the case for all of the indexes. The Dow Jones, it's got a little oversold momentum line. The NASDAQ 100's got a very strong near-term posture with momentum line rising. This has been lately one of the stronger indexes that we've had there. And then you can see dark green shading and a green line across the board for all these indexes, including the Russell, which continues to be very strong and kind of has broken this near-term divergence pattern with a higher high again on the near-term line and a higher high on the index itself, another new high for the index, at least on an intraday basis here, even if we were slightly down from yesterday's close. So very strong, continuing to show strong patterns on the market forecast going forward across a lot of these different indicators. And while there might be a little bit of a short-term pullback, as we've seen with the near-term line dropping below 50, as of right now, that's kind of all we expect that it will do until potentially we form another overbought cluster or near-term divergence or something that would signify that we are close to being done. Now, if you notice, this intermediate run started for the Russell a little earlier than the rest because that didn't pause it. That was just a little, light pink shading and yellow line. We never did get the intermediate line down, so that just paused it. It didn't end this bullish run. So technically, the bullish intermediate rally started here on October the 2nd, where we got, or really October the 5th is where we got the green line, but pretty much beginning of October. And so now we are 2 months in to a intermediate run that typically lasts 1 to 3 months, and we kind of been expecting that it would last more on the shorter end of things. Whereas for the S&P 500, for an example, this intermediate run started over here on November the 5th, so we're only 1 month into the intermediate run on the S&P 500. So, again, and that's kind of about the length of time that we've been expecting that it would last. Again, considering that we had such a long intermediate run here, let me just make this auto again, that we had such a long intermediate run here without much of an exhale, right? And then now we wouldn't expect a similar large inhale or impulse move coming out of this like we had going into it, that pullback. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us that you liked the video today and that you want us to do another video again tomorrow. It's a quick way to give us feedback. If you don't like our videos, you don't have to click on anything. You don't even have to watch. But if you do like our videos and you want to let us know, hit that thumbs up icon. That's a big deal for us. We really appreciate it. Also comment. What did you get out of the video today? What stood out to you? Or questions? What questions or comments do you have? Post those down in the comment section. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle here at DavidSettle42. And join our Market Outlook Facebook group that we've created. If you're watching our blog, or watching on our blog, check out some of these other things over here on the right, including our Market Outlook Live video, where we do these, we review all the trades I've done in other Market Outlook videos up till now, until we close out the trades. In fact, we close out a couple of trades today, previous Market Outlook videos. And I also put on today's trade idea before the market closes, so you get that early. If you watch these. Again, this is available for all of our premium and our plus subscribers. Our plus being our monthly subscribers. You can come here and see all of our trading rooms that we have coming up, including Brandon's really popular dividend growth investing. That's tomorrow. When you're a plus subscriber or premium, you get access to all of those trading rooms, as well as all the archives of previous classes. You can see some of our posts that we have here, and then over here on the left, click this heart. It opens up a new tab for your browser. Hit that like button right there. Also do the same thing. Click that thumbs up icon on the Facebook post and come over here and hit that like button. Again, the more you do that, the more people will see our content because of the engagements it has. These Twitter and Facebook will promote our content to all of our followers. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's get back to the charts and let's take a look at the weekly chart here for the S&P. And again, I mean that PPO just continues to grind higher. We are now 3 days into this new week. We don't have a higher high from last week, but we do have an easily higher close. And that's a strong sign, and we don't have a lower shadow and most likely won't. So still continuing the trend, and we talked about it before. If we bounce back up here, that you might not get like 13 weeks, a good typical intermediate run of 13 weeks, but we might get 4, 5, 6 weeks, something like this, before we get another series of red candles. It's a little unfortunate. We can't really go too long with some red candles on a weekly chart, because then the market kind of goes nuts and haywire. Even if we're well above the 200-day moving average. But keep in mind that we still haven't tested the 200-day moving average after the golden cross. So that's forthcoming. That's what typically the markets do, especially when you have a PPO this high, because it brings the PPO back down to a level where you can start a new 13-week long, 15-week, 14-week long intermediate run off of that. You can see on that market forecast too, and we're not done with the week quite yet, but you can see, or actually we're just starting the week, but you can see so far the weekly candle Very, very small range. Of course, it's only a day, but you can see the market forecast. Very strong intermediate posture on the weekly basis, not just the daily basis. The near-term line also very strong on the weekly basis, and obviously well above 30-week moving average there. So very strong long-term patterns. And then, of course, looking at like the RSI and the CCI, you can see, they're kind of hitting their ceiling right now, barring a big push that pushed, in this case, pushed us all the way up above 80 to extremes, and that's started the decline. Whether or not we get that kind of push here at the end, we can see the last two times we got above that signaled the end of kind of a parabolic move there. Obviously, the Ichimoku cloud is nearly to strong levels. We are not quite the 5, and we're not quite above 80. But they're getting there, and as I've shown you before, we're well above the blue line, well above the cloud. The red line is well above its price. That's not going to be that way for long, though, depending upon how much we rally here. And then you look at the DMI, and we've talked about the importance of the DMI of this negative index dropping below 20 so the ADX can rise. Well, it finally did that. We'll see if it stays there, but the ADX is finally rising. We got light pink shading because of that, and the negative index is finally dropping below 20. So it kind of signals that we are in this directional move, and obviously from a Bollinger Band standpoint, well above the value area and into area of path of least resistance, as you can see, since it is all-time high. Like, for example, over the last 10 years, there's just absolutely no volume up in these levels. So very easy to rally, but also no volume down here either. So easy to pull back to these spots too, if and when that ever happens, of course. But we are definitely in the path of least resistance from a volume standpoint to the upside, with very high levels on the Bollinger Bandwidth, in this case on the weekly chart, but also on the daily chart too. We're easily in the upper quartile there on the Bollinger Bandwidth and pushing up against the upper band. Not quite breaking out up above the Keltner channel, but at least we're kind of pushing up against the top of that Keltner channel. We were above it yesterday, and that's again, a lot of times when you're in a good strong bullish move, you can get above and stay above the Keltner channel for a while you stay in that bullish trend. So we're not quite to that point yet. We're actually back down below both the Keltner and the Bollinger Bandwidth there. Now let's take a look at the intraday chart, and you can see, kind of a big close, pulling back for most of the day, very small range, mind you. Big bounce at the very end, kind of pulling back a little bit in the after hours there. Obviously, flirting with the high tag being well over here. The low tag has really moved up now to this 350 area, but as I mentioned before, that's 20 points. That's actually well above 5%, which is typical stretch, right? We've been at 10%. So it's stretched, right? That's the stretch between the high and the low. And that low is going to stay here for a couple of days. We'll move up here. And then by the end of the week, should be trading here at 354. So now we're looking at a 15-point range, just slightly under the 5% level. That kind of gives you an idea of how much it can stretch, how much we can move up till we get back to that 5% stretching point again. Today's volume was very, very light. 48 million shares. It's been light for a few days. The trading range obviously very light. That's having its impact on this. It's bringing these volume and ATR levels down to very low levels that we've seen in the past. Money flow is an issue when you kind of average the volume with price to get an idea of money flow. When you look at different money flow indicators here, you can see that obviously here in September we had a big increase in money flow and haven't really, even though we're up to well higher highs since then, the money flow has been a lot less. So a lot less money here depending upon the indicator, and for some the indicators starting to falter, starting to roll over a little bit as we kind of lose all that volume over the last week or so obviously because of the holiday, but even since then, we've unable to kind of ramp up and get going because of how frothy things are. Let's take a look at the volatility index. And that's been a big deal because we've been watching for it to get below 20. Well, it bounced up today, gapped up, and stayed up above 20. And you can see we actually stayed up above the 85% mark too. Still in bullish zone, but in the upper half. So we'll kind of keep our eyes on that, especially considering that we're not able to really get going and breaking through here. And we're still in a very, very tight range from a monthly basis as we head into December expiration, being a month away from that November expiration. The VIX not really moving in a significant range at all. To summarize that technical outlook, essentially the market is just grinding. It's in bullish trend, it's in grinding mode. So which can be just painfully slow for any directional trades you may be in. Not a bad thing at all for a lot of the short put verticals we've been doing lately in class and in these videos, because we can just wait those out, and time is on our side for those. So at least we're not in bearish mode, and it doesn't look like we're going to be imminently at all. Now within a few weeks, very well could be, and I fully expect that we will, but not necessarily imminently, as we are in a strong frothy market. But you can stay in strong frothy bullish markets for a while, until we get some kind of catalyst that will start popping some of these little miniature bubbles, so to speak. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comment section below, especially if you disagree, as to why. What are you seeing? What charts or indicators are you looking at that suggests why you're either a lot more bullish than I am or a lot more bearish than I am? All right, now let's take a look at what's driving this price action here. We'll take a look at, look at that chart. This is a 3-month chart, and IWM is up 23%. And here in about a week, we're going to be coming up off of a more significant low point, and we're going to be up at least 30%, depending upon if we go flat for the next week, because we'll have that low in the Qs as well. And you can see the Qs significantly underperforming. Emerging markets also outperforming S&P during this past 3 months by nearly double. On the other hand, your safe haven areas, gold and the dollar and long-term bonds in particular, since that November 30th low point, have really been lagging behind. Here's it'll actually be the 31st going forward. There's the run on international stocks and small cap stocks outpacing. And then you can see the dollar really struggling. And the dollar is, when you take a look at its chart here, and actually let's take a look at this one. When you take a look at the dollar's chart, it has really broken out to the upside in this case, or the upside in the case of the euro, downside obviously in the case of the dollar. We did produce a cluster here last week, and since then we've been unable to extend. We're so far up above 30-day moving average, and you can see it's kind of following that pattern to pull back towards, in this chart, the 8-day exponential moving average. And you can see the MACD histogram is falling, stochastics is rolling over. But you obviously have a very strong trend, so keep in mind that the weakness we may be getting as of right now is just kind of short term. You're nearly above 80, you're nearly above 4, it needs to be above 5, but you're nearly to 4, so very strong trend going against the US dollar right now. In the case of long-term bonds, you can see the kind of trading below the cloud, the red line below the price. We are in a noisy period right now, as sideways as we are, but you kind of get an idea of how weak bonds are. And of course, gold being the other safe haven asset class, also down below its cloud. A little bit of a bounce up and closing up above that blue line. You can see it also means, oops, not that one. It also means here too that you're closing up above that 8-day, 17-day moving average. So either we bounce off of this, or we come, or we break out and start moving more to the upside. Here's the chart here, light green shading, not necessarily a pink, yellow line like some of these others, but similar type of pattern. So you can see the bearish trends that we're getting in these safe haven areas. Now we take a look at the sector chart, and you can see the big moves we're getting here, and really it started on the 28th for the energy sector, but strong moves. We'll go over here to the 29th. Going forward, you can see energy is up 43% since the end of October, so a little bit more, a month and a couple weeks. Financials 21% in that time frame. Industrials 18.5%. Materials very strong as well. Technology matching the market. Communication services matching the market for the most part. Utilities and safe havens really lagging behind. As I've shown you this chart before, but when you look at the major global economies out there, the ETFs that track them, you can see very strongly bullish, like well above 30-day moving averages, parabolic type moves going on in some of these, like Korea and India, a couple areas that we're weighted towards in our long-term portfolios, mainly and as well as Canada here, mainly because of the weakness in the dollar. And that's really contributing to some strength in these areas. China's getting light pink shading and yellow lines, a very bullish pattern for China. The U.S. isn't as bullish as some of these European areas are, but they're the ones closest to getting a vaccine right now and ending their lockdowns that they've had. So very broad risk appetite all across the board in a lot of these areas, giving us a strong overall market posture as a result. If we take a look at the Sector 12 grid, here we go. You can see how strong some of these sectors are and how not so strong some of these are. Utilities weak, real estate's weak. That's not surprising with rising yields. But you can see some of these others, staples not as strongly bullish. Healthcare not as strongly bullish. Again, not surprising. Energy is very strongly bullish, as well as technology, communication services well above their moving averages, rising sharply. Very strong moves, and that's what lends the S&P. So it's a broad rally. It's in multiple areas of the markets, including real estate and to some degree utilities, but very strong bullish moves all across the board. Just shows just how strong and for that matter overbought this rally is. As I showed you, pretty much all these sectors now are above their 200-day moving average aside from utilities. So very good sign from a market breadth standpoint, a breadth thrust standpoint to have such a big, large percentage. It doesn't necessarily mean we have to roll over right now and just tank without getting at least some kind of divergent high point first because of how strong the current peak is. Of course, that brings us to our trade idea of the day, and I wanted to take a look at Sienna. Sienna had a really bad earnings reaction this last cycle. It's got earnings coming up again this week, but you can see after kind of flirting with that gap last couple of days, really breaking out the nice, good, strong move higher today. Of course, momentum line dropping, but the intermediate line just getting above the intermediate run. It's kind of in the midst of starting here. You obviously are really darn close to, or you actually are breaking above the 200-day moving average, and now you're really darn close to getting a golden cross, which means this bullish move can last for a while. Obviously, looking at the 3 green arrows and the 2-line versions of those, rising momentum, strong 8 and 17-day moving average is rising up or above the 8-day moving average. We have a strong directional move going on according to the directional movement index. The RSI is extreme actually, but that's okay at the beginning of intermediate runs, right? To get them, it's better to get these at the beginning of the run instead of at the end of the run like we saw there. So very, very strong move, needless to say, across a lot of these different indicators. Not quite above the cloud yet, but working its way there. You can see the top of the cloud also lines up with a 38% Fibonacci retracement level. So breakout above that gives us a run up to about $55 there. And that becomes significant because while I'm going to look to buy a put option here, I'll look to buy a put option, or excuse me, a call option at the $50 level. I'll sell the $55 to help cover the costs. So what that ends up doing is it gives me, for about half a normal risk position sizing, it gives me the opportunity to make 3 times that much money if we go up and stay up above 55 or 2 or above 55. And the maximum gain still inside of 1 standard deviation. So, and that's worst case scenario. If we come out of earnings with a move in the wrong direction, then we'll take a few $100 of a loss here, which would make that risk reward even that much better. If we can keep the loss smaller than what we even have it at half, with the large reward potential we have as an offset to that. All right, that wraps us up for tonight. You've heard from me. Now I want to hear from you. Let's use that link right there in the top right corner of your screen that takes you to our Market Outlook forum. Open up any new threads with any new questions or comments you have, or apply to anybody else's threads, and let's keep this conversation going in between videos in our free Market Outlook forum. Again, thank you for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon on YouTube, as well as the likes on Twitter and Facebook, and comment on our video. Have a great rest of your Monday night, everybody, and we'll see you all next time.